Welcome to Farm Here Daily, a Field Forward podcast. I'm your host, David Geiger. Today on Farm Here Daily, the first USDA report in months was released on Friday and had a big impact on the market. Following up with that today, I chat with Angie Setzer with Consus Consulting about the newly released data. Please be sure to like and follow the podcast as well as our social media at Field Forward Pod. We would love to have you join our community, keeping folks informed about what is affecting our farmers. This is Farm Here Daily. And joining us on Farm Here Daily, we have with us Angie Setzer with Consus Consulting. Angie, good to have you on the program. I think we've had you on the program before back in the summer, and it's been a while, so nice to see you. Hope everything's going well. And we're gonna be talking about some of the big news that's happened pretty recently with some of the USDA report that just came out on Friday. First time we've heard from the government in about 2 months. Just to kick things off, how did that impact the market initially? And now that we're on Monday, starting a new week, what's going on here?
We a lot of folks probably would have agreed, and myself included, that we could have kept the government closed for a little bit longer if that was what they were going to give us on day one of returning back, or report one of returning back from being shut down. Obviously the numbers came in a bit higher than what traders were expecting, or at the very least, and I'd set it ahead of the number where it looked like, or it felt like, we were trading much lower on the yield assessment side or much higher on the flash export sales side or something. We were coming into the report on Friday is set up for a bullish report. And it was going to take something magical to convince the market that they had gotten their bullish report. And so we did have a very negative reaction, and it was exacerbated. It was a Friday. You had gold down hard. You had several other things happening. Money flow in general was just sort of negatively facing the market anyway, and so you had this sell-off into Friday afternoon. Fast forward to Sunday night, right? We take another leg lower on the soybean side of things, and immediately, as quickly as we were checking to see around where support would lie, we saw this buying come back in. We saw the market stronger overnight. And then as we got into the office here this morning, we started to hear more and more, not only from the administration, Secretary Rollins, Treasury Secretary Bessent, a handful of them over the weekend had been like, hey, China's going to come in and buy. They've got time. They have until spring. But then today we got in and we actually got confirmation that China is buying. There's rumors of upwards of 7 cargoes, which the 7 have basically been confirmed at this point, all the way up to 20. 20 was the number that we heard at the end of the day today. That feels a little aggressive, but I'm not going to count it out just by how the front month spreads acted and how much soybeans rebounded. But we also saw massive crush demand, remember. So the highest estimate was around 210 million bushels for crush, soybean crush in the month of October. We ended up with 227 million or over that, and so we saw just a couple different things today that basically, right, USDA who on Friday, like most folks are kind of under the assumption that their yield number is probably still a bit too high. And now in soybeans, we're seeing proof of really solid demand in crush and China coming in to buy. And so here we were. We forgot all about Friday like it had never happened.
You mentioned something about there being rumors around China buying and then some of that getting confirmed. I know there's this saying in the marketplace, buy the rumor, sell the fact.
Mhm.
And I'm just looking at kind of the facts that we've seen over the past few months, and that is China, until this deal, has bought nothing.
Yeah.
And they just started buying. They're committed to buy about half what they normally buy.
Yep.
Where are all the beans going then? If we've harvested and we're done harvesting, we have a general idea of what's there. Where's the storage and where are beans going to potentially cause this to, in Monday, we're seeing a pretty huge increase in the price.
Yeah, I mean, it's not just everyone's been focused so much on China. They're missing a lot of other massive moving pieces. I'd mentioned the crush number and how big it was. We are hearing more and more from the administration that, from folks surrounding the administration, I should say, that we will see supportive biofuel announcements, or at least a continuation of solid RVOs, the renewable volume obligations that we got midsummer. Everyone's kind of acting like those aren't going to happen when their proposals, we just need to get through the SREs, the small refinery exemptions. Once we can establish what those rules look like, then we can reinforce what the RVOs look like. And that should be supportive. But that's been part of the problem that we've had, right? Is we haven't had clarity. And it's allowed us to completely focus on China. I keep saying it's like the Brady Bunch, the Marsha episode, except for it's China, China, China. That's all we're talking about. But we have other moving pieces. Like we've got the China demand. The USDA is only factoring in China to buy basically what the administration is asking them to buy. They are a little robust on their non-China demand, rest of the world demand, but you also have big crush. You have big crush elsewhere. And we have the EUDR. You have the European Union deforestation regulations that we didn't have before that could really increase the amount of either whole soybeans Europe is importing from the US or soybean meal in general. You got to remember 45% of Brazil's soybean meal exports go into Europe, and that won't happen if you see them come forward and say, okay, EUDR starts at the end of the year. And that's part of, if you look and see, a lot of folks had anticipated that that was going to be delayed. The European Commission decided that they were going to put that into effect at the end of the year this year on October 21st. If you look at the soybean meal chart and the bean chart, we started to see recovery far before the Xi Trump meeting. And so as a overall, like I think we've spent so much time focusing on China demand when really it's such a small portion, and the rest of the demand sectors that we have, and the fact that we had such a small crop because of the reduction in planted acres this year is what makes it a bit different than a year ago. Like what China has bought is fine to bring up, but it means nothing as we work our way through this marketing year.
I think you're getting to a question that I've had on my mind for a while here, and that is China is now, replacing US product with Argentinian and Brazilian product. And both of those countries have been powerhouses in grains for many years now. And they were having a fine time selling their product or getting their product to market. So if China's buying from them, then places they were selling to are no longer able to get the same product. So how can you tell on if the US is now switching to some of those markets that originally had been buying those South American beans?
We look at basically export sales, export inspections specifically. And so Brazil's always been really good about picking up Egypt, Bangladesh. There's a whole handful of countries that you don't really realize are massive soybean crushers. Like I didn't know that Egypt imported five, six. I mean, I'm going to be wrong on how many million metric tons they import. They were one of our largest gains in business last year when China saw a decrease. And logistically speaking, Brazil's always kind of been able to get into there much, much cheaper. And so you've seen that. I think the biggest ones that you're going to see are going to be members of the European Union in general. And then again, like I said, Egypt, Bangladesh, Pakistan. There's a whole host of folks out there that we have to be really careful not to, kind of, oh, that's not important. Like, no, they're not importing 108 million metric tons like China is or whatever. But if they had an extra million to 2 million a year and the US is able to kind of supply that, which is what we've been seeing, then it cuts into how many metric tons or how many millions of bushels we need to send to China. The other one that's been really interesting that we've seen a big uptick in recently in business has been Mexico. Now, Mexico's never been a big importer of Brazilian soybeans by any means. The US has always supplied them. But
Right.
Mexico has an 11, 12 million metric ton crush capacity that they usually only use less than half of. So you've seen as they've been feeding more cattle and their margins have improved, they've been importing more in the way of soybeans and crushing them on their own. They're also wanting to do more in the way of biofuel. And so you have a whole host of these countries. India is another big one. And so, yeah, there's several out there, and it's such a hard thing to pin down because you have so many moving pieces. But we are still seeing decent demand. We saw it today in export inspections.
I think I'm kind of hearing that there may still be a decent amount of demand, more so than the concerns may weigh, and that's something to continue to consider. However, I do want to look at the local storage level because we are likely to face some basis issues. I think I'm not the expert. Are we likely? Maybe that should be the better question.
Yeah.
Asking someone who knows. Are we likely to face basis issues if we're storing so much more beans?
That's the thing. That's the bajillion dollar question at this point, right? Like, that is the thought process, is that we are storing a ton more soybeans. I haven't seen anything out there that says we are. I know that there are several little anecdotal. I know that, especially in Iowa, you've got those little government bins dotting the countryside that I think are more full this year than in years ever before. So you've got 5,000, 10,000 here or there that you may not have otherwise. The biggest pressure on basis is behind us. And honestly, I think a lot of merchandisers out there, and this isn't negative towards merchandisers in general, they were reading the writing that was supposedly on the wall. But I think they got too wide too early. And it allowed a lot of folks to have to make decisions to increase that storage, to use those government bins to, I joked about it, but then you had politicians using it as an actual, oh, well, there's people storing soybeans in their garages or whatever. Like, I don't think we ever got that far. But the market structure was telling you not to deliver them at harvest time if you didn't have to. And so I would say the bulk of our basis pressure is behind us at this point. We may see a resurgence of poorer basis or basis weakness after the first part of the January 1st, because farmers will re-engage a lot of times around that period and start moving more grain into the pipeline. But yeah, I'm not yet convinced that the farmer has far more beans on hand than what they did before. But we will know soon, and we'll be able to watch basis and see if it starts to erode or get worse as we move forward. Then we know that there's far more moving into the pipeline than we need.
So obviously, soybeans are a national headline. We talk a lot about soybeans, but I think for a lot of folks, corn is what's really more in a rough position,
Mhm.
especially considering the input challenges that our farmers are facing. As you look at the markets, is, for example, starting off this week after that USDA report, is it kind of just being pulled up by soybeans a little bit? Or where's the strength coming from in corn?
Yeah, corn is a little bit corn's hard, the same sort of thing. Like, I think a lot of folks on Friday were anticipating, myself included. I really, really struggle with this idea that we have a corn crop as large as what the USDA is saying. Like, I'm not gonna say that there aren't record, pockets of great crops and record production across the corn belt. Like, growers in Indiana had a good year, surprisingly good year compared. Like, I've got customers across Michigan that have, and things like that. Obviously, South Dakota into Minnesota, Southern Plains, like there are some really large crops. But nothing in the cash market right now is saying that we have the same amount of soybeans on hand and 1.8 billion bushels more of corn. Like, it's a noticeable amount, right? It's a significant amount of production that the USDA is saying that we have increased year over year. And so to me, I think that's part of why you saw the market. Like, yeah, we lost a dime on Friday initially, fell way back really quickly. But I think most folks are kind of scratching their head and saying, okay, wait a minute. Like, the USDA says one thing, the cash market and the pipeline says another. And harvest isn't one of those things. Corn harvest isn't one of those things that you can kind of just avoid. Now, yes, we could see an increase in bags. We could see an increase in flat storage again, like I said, with soybeans and some of these other things. But you should see it. You should see bags. If you're in Iowa and the farmer has turned to bags, you should see a countryside dotted with bags. And I don't think you are. You can tell me. But so to me overall, I think the cash market and corn, we're getting wrapped up. We have corn in places that is way too much, that needs to make it to places where they don't have enough, and that takes forever. I always say the cash market oozes, it doesn't move. And that's what you're seeing. But we are seeing like the widest bid ask I have ever encountered in my career. Like, we're talking 40 cents between what is posted and what someone is saying you need to pay them to get bushels moved. And so I think corn has found its support. I think we're right around the lower end of what the range is going to be. I just struggle to see what takes us the next leg until we either see a weather issue pop up in South America that's big, Argentina gets worse, something like that. we see a further deterioration of the Black Sea, which I think we're on the cusp of, or we get to January, we get quarterly stocks, and we realize that the production number is too large. So we're probably range bound with basis doing a lot of the heavy lifting in corn for the next little bit. But I still think the support is directly underneath this market, and the farmer is going to see decent opportunities to market the corn throughout the year, similar to what they saw a year ago.
Now, maybe we should have mentioned this at the beginning, but there's a bit of an elephant in the room when it came to that Friday report, and that is a little addendum, a little note they
Mhm.
put on there that said, this report didn't use all of the information we typically use, and I know farmers and analysts are a skeptical bunch. What does that indicate to you when you approach looking at the data we received, the industry data we know, and
Yeah.
how you want to look forward?
So the biggest thing that Lance pointed out, Lance Honig from NAS, the director of NAS, there is that was a World Ag Outlook Board note. That was on the WASI. That was not on the NAS publication. So he wants everyone to know he feels good about his data at NAS, his production data, which is funny because I don't. And that's what I told him. I'm like, it's odd, Lance, that you feel good about it because I think it's hot garbage with the utmost respect. And we have a good enough relationship. I can say that he's used to it.
Right.
But I do. I don't. I have questions. I have a lot of questions. I have a lot of issues with the survey driving things. I think timing can cause issues. I think there's just a lot of problems. My biggest gripe right now, if you can say that word on it, pardon my French, but my biggest issue right now with NAS in general is the acreage number. I think there's something off with the FSA data that we got in. I don't know if we have more in the way of acres that are actually earmarked for high moisture or silage that have snuck into commercial corn production or what. Maybe the yield is 185, but the harvested acres need to be 87. Like there is something off overall on the production side of things that I think we have to figure out. But having said that, that little note there had nothing to do with production. On Seth's stuff, so that's Seth Meyer, chief economist of the USDA, head of the World Ag Outlook Board, that's where that note lied. And to me, that is a sign that we didn't have enough foreign agricultural service information. So if you saw, there wasn't a lot of changes. There were negative changes, or the changes that were there were bearish to wheat because the wheat balance sheet grew worldwide and some of these other things. And so to me, what we were lacking information wise was the full export data. So they only made minor adjustments based on that. They were missing the full export data. They just had raw. We were missing all of the FAS, the foreign agricultural services, the satellite data, the estimates on production, the demand figures, and all of that. And so to me, what I think we see change down the road are going to be the global numbers, probably more in the way of the export demand figures, especially like they left wheat unchanged for some reason, when we should be seeing a growth in wheat exports, some of these other things. And so I think that was more of it, the world numbers and the overall like exports and some of the demand categories. I don't think it was production, even though my biggest bone to pick is with the actual production number.
Angie, just as a final note, I don't want to take up too much of your time. It's kind of a busy week here. I do want to just get your perspective when you are watching for future reports now that the government's reopening, and as you're looking for that more traditional type of data intake. Are you expecting any changes with the disruption that we've seen, or are you expecting things to kind of return to some level of normalcy?
Hopefully we return to some level of normalcy. I don't know who is in charge of the reissue or the data rollout schedule, but I would like to send them a strongly worded letter on how terrible it is. Simply because we need to get up to date on the export sales. Like we need to see what's actually taking place. And at the rate we're going, it's going to be Christmas before that happens. And the same with the CFTC data. The Commitment of Traders report is huge. Like these are the two biggest things that we need to know. What is money flow doing? What is the commercial entity doing? Like, are they buying? Are they selling? Are they getting bushels bought from the farmer? That's what we need to see. Like, we need the Commitment of Traders numbers, and then we need to get caught up with the export sales data. With without that, we're just continuing to fly blind and working really, simply off from the vibes sort of effect. Like, oh, this feels good, let's do it. And I'm fine with it as long as we kind of keep moving higher in the short term for the farmer. But yeah, I mean, we're going to get back to normal in the sense that we'll get flash sales, maybe we're supposed to. We will get weekly export updates. We're going to get some data pieces to collect to catch up and some of that other stuff. But if they truly think that they're going to take 6 weeks to get us caught up, then it's worthless. It's worthless data. And if you're arguing that you have transparency, you're also lying to us. Like this is not providing transparency at all. Like this slow rollout is not working.
I can always trust Angie to be a straight shooter there. Angie Setzer is with Consus Ag Consulting. How do folks get a hold of you if they want to hear what you got to say or maybe sign up for your guys' newsletter?
Yeah, you can check us out on the web at consusag.net. Or you can find me on Twitter at Goddess of Grain. I'm also on TikTok at Goddess of Grain too. So you can check out either one.
Consusag.net and at Goddess of Grain. Angie Setzer joining us on Farm Your Daily. Thank you so much for your time.
Thanks for having me.
This is Farm Your Daily. After hearing from Angie, we're going to take a quick look at the Monday market close. And there was green at that close for Monday. December corn up 4.5 cents at 4.34 3/4, with soybeans rising 32 3/4 at 11.57 1/4. Soybean meal in January $8 a ton in the green, $332.60. Soybean oil up a penny at 51.48 a pound in the January contract. March wheat 17 cents more at 5.58 1/2, with hard red winter wheat seeing an increase of 13 3/4, 5.44 3/4. Checking out the livestock market close for Monday, there was some green there as well. February live cattle up $2.25 a hundredweight at $221.77, with January feeder cattle seeing an increase of $5.72 a hundredweight at $326.27. Lean hogs in February up 5 cents a hundredweight at $79.42. That is the Monday market close. This is Farm Your Daily, a Field Forward podcast. Thank you again for listening. In order to continue to produce this type of local content, we would love to have you join our community, so please follow the podcast as well as our social media channels at Field Forward Pod. You can also find me on social media at Geiger Reports. Again, I am your host, David Geiger, and I'll be back again tomorrow, everybody.